Welcome to the Academy. Our last video or lecture, we look at accounting equation where we give an example with the transaction, financial transaction that will confirm our accounting equation that says asset equals to equity plus liability. And we use this transaction, the financial transaction as you can see, and we confirm our equation. We also talk on the double entry principle, one transaction with two accounts, one debit and one credit. And today we're going to look at the journal entries. As you can see on the board, journal entries. What is journal entry or what is journal? This journal is the book of account that record transaction at the initial level. That is a transaction that has not been recorded at any account or any book must be recorded at the journal. Then after you have recorded the transaction in your journal, you will now post the account at the journal to other accounts like the ledgers, the trial balance, then you use it for the preparation of financial statements. Simple as that. So now let's look at the journal entries. Before going to the journal entries, please don't forget the double entry principle. Double entry principle. For one transaction, we must identify, I say must, identify two accounts, and one account for the debit and the other account for credit. And debit means any transaction that has to do with receive, you debit it. Any transaction that has to do with paying, you credit it. So you must identify two accounts in a transaction. That is double entry. Simple. Now let's look at the second thing that you should consider if you are preparing your journal. 1. 2 is an acronyms. You must consider these acronyms. Debt, click. So this debt click is an acronym that is your D, your big D is the debit. The debit, which is also written like this. This is the D. Under the debit, what you are to debit, the items that you are to debit are the expenses. Don't forget, A is the assets and D is the drawing. So this debt is telling us that our debit consists of expense, asset and drawing. Then our click here, that is the credit, which is also written like this, CR is the credit, consists of the liability, income and capital. Simple. If you can master this, you are done with accounting, especially entry. Now, knowing that your debit consists of expense, assets and drawing, and your credit is liability, income and capital. Whenever you are about to confuse, I think getting confused, you call back. Your debit is expense, assets and drawing. Credit is liability, income and capital. Click and debt. So there is a level that this expense, assets, drawing will be credited, but not at this level. It is an abnormal situation that will make you to do that. Even here, debit it, but not at this level. This is just for the beginner. Now, this is what I want you to consider. And after considering this, we'll now go direct to our entries, our entries. We'll move down to our entries. So journals are also divided into two. We have the general journal and the special journal. So, but what we're concerned on is how to enter your transaction to journal. I will make a video on these types of journal after this video. Now, if you want to, it is not like a format, but it's not exactly a format, but it's a format. Because journal record transaction in a daily basics. In a daily basic. Assuming these are our transactions. Here, let's say this is date. Let's say July. This is 1st of July, transaction 1. The transaction 2 is like the 2nd of July. Transaction 3 like that to transaction 7. Now, let's see. This is our journal. Now, say date, your date. Then if we should put details of particular, the here is debit and credit. Your currency, $sign. Your currency, $sign. Now, this is day 1. We say 1st of July. 1st of July. Let's identify our account. We did that in our last video, but let's just do it and see for those that are just joining the class. The owner deposited $50,000 cash to the business. The principal, the double entry principal is going to be applied here. That is, the owner deposited $50,000 cash to the business. Now, the owner deposited, he's investing, and we say investment is capital. This is capital. Owner deposited, the owner deposited, here is capital account. Capital account. And cash, we say, I've explained that cash check we consider bank account. Simple. Now, in your journal, this is date, the 1st of July. Let's consider our account. We have capital account and the bank account. In accounting, we consider debit first before credit. Don't bring this capital, since it is the first account identified. Even if it is the first account, we consider debit before credit. So now, our first entry will be bank. If you come here, let's put details. Details. You say bank. Bank. How much? $50,000 debit. $50,000. Then your second account is the capital account, which is also the same amount, $50,000. This is how to enter your transaction in the journals. Now, another thing is, in your journal entries, there is a narration. You give a narration. You tell people the reason of this account that appears in the journal, and the narration differs, but all capture the same thing. Like this, you say the reason why we have our bank at the debit and capital at the credit is being amount deposited by the owner to the business. To the business. So this is the narration. Your narration might not be like this, but it must capture something like this to show that it is something being deposited or amount for the starting or investment by the owner. So seeing this amount deposited by the owner, it means this is an investment. An investment is capital. So let's go to the second transaction. The second transaction here, that is July, 2nd of July. That is the date. Now, bought stock on credit, $5,000. You identify the account by saying stock account, and this is trade payable account. Go back to my video that my previous video. You will see all this. I'm just doing it for the sake of those that were not in the class or did not watch my video, my last video. But please go back to the video and watch it very well. You will understand it more than the way we are doing it, because I think we have already did something like this. So this is stock account and this is payable account. Now we have identified the two accounts here. Let's come. We say, and stock is debit, because bought stocks of credit. You are receiving stocks despite you did not pay for it, and that is why the payable is here. You pay for it. So, but you have received stock. Our stock is now will be debited. You debit your stock by saying stocks, and it is $5,000. You debit it, $5,000, and you credit your payables, trade payable with $5,000. Simple as that. Then the narration, you look at it, you say being stock bought for credit, bought on credit. Being stock bought on credit. Simple as that. You can put your narration the way you want it to be, but you must capture this transaction. Then let's go to the 3rd day of July, 3rd July. We say paid telephone account by check. Telephone. We paid telephone account. You can see it. This telephone account. And I said it is paid. That is expense. It's an expense. So by check. Check is going. That is bank. You are giving bank. You are giving the amount of bank. You are giving the balance. The balance of bank is moving. So this is the credit part of it. Bank is credit. And telephone is debit. Telephone is receiving it. Now, you say your telephone. You start with the debit account, telephone. You say the amount is $1,000. And bank is decreasing with $1,000. So as you can see, this is transaction, the 3rd transaction. Let's go to the 4th transaction. Before going to the 3rd transaction, the narration, you say being amount paid for telephone. Simple as that. You can put what you want. Being amount paid for telephone. Let's continue. Transaction 4. That is 4th of July, we say bought stock by check, stock and bank. Bank is the credit, stock we're receiving. You start with the stock, since it's a debit, stocks, and it's 2,000. Say 2,000. And bank. Bank, 2,000 credit. That is for bank. Then the narration, you look at it. Bought stock by check. The amount paid for stock. Being the same thing. Being amount paid for stock. Stocks. Simple as that. That is the narration. Then let's continue. Before we continue, let me pause a bit. You do this transaction, work it out. Let's see your workings. Okay. Let's compare. I will do it now. Then you compare with your workings now. Transaction 5, the fifth transaction, says paid suppliers $4,000 cash. It's the same thing with this telephone. This supplier account is an expense, then cash is bank. And your cash is going, credit. Your supplier is receiving, debit. Then you say suppliers. 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 4,000. You put your $4,000 here. And your bank. Your bank. 4,000. The credit side. So you say paid the same thing. And being amount paid to suppliers. Being amount paid to suppliers. Suppliers. Simple as that. Then our transaction 3, our transaction 6. Transaction 6. Oh, let's clean. Let's do like this. Let's do like this. This is our transaction 6. The 6th transaction, you say is 6th of July. The owner drew $3,000 for personal use. This is the drill. This is drawing account. Drawing. And even there is no cash or bank, this is bank. Go back to my last video on accounting equation, you will get it very well. Now, since the drawing, don't forget that debt. The drawing is debit, is receiving, and the cash is going. So you say drawing, $3,000, and bank at the credit side, $3,000. So the narration, being amount due for personal use, being amount due for personal use. Personal use. That is all. Then the 7th transaction, 7 July, paid monthly rental $3,005 to the company. So you're paying, you are receiving cash. You identify this is bank. So you are receiving, this is bank, and the rental is income. and we say income is credit. You are receiving, even if you're about to confuse, you are receiving cash, and you say cash, that is bank, 3,005 debit, $5, and the income, rental income account, 3,500. Then the narration, amount being amount paid for rent. Simple. So this is journal entries. Now, next video we're going to look at the ledger, how to post these entries to our ledger. Thank you.